Hi, everyone. Welcome to Markets in 2 Minutes. This is Chris Maxey, Chief Market Strategist at WealthSpire. And today, a topic that we wanted to revisit is inflation. It's something that we had talked about previously, and for better or worse, it's a topic that's simply not going away in everyday media. And the primary reason it's not going away is what you see on the chart here, which is the Consumer Price Index going back to January of 2021. You can see that it has picked up very dramatically, and in some respects unexpectedly. So if we go back to January of 21, year over year, consumer price index was tracking about 1.5%. And that number subsequently grew to 3, to 4, to 5, to 7, to where we saw ourselves over the summer, which is about 9% annualized. What you see in the orange area, though, is what is potentially going to happen on a go-forward basis. And I think this is interesting just for the understanding, this is certainly not a prediction or a projection, but we wanted to show the math behind this, that if CPI does track at 2% over the next couple of months, so as is potentially possible, the path back to that 2% target, which is that dotted line there, that's the Fed's 2% target, is going to be slow, right? It is going to take us quite a bit of time. And as we think about the underlying complexities of what's going on here, there's certainly influence from food costs, from energy costs, from retail gas. But a big one that's now just showing up is shelter. So housing costs in particular, which tend to flow through the CPI report on a lag basis. So as we see home prices increasing in 2020 and 2021, those numbers generally flow through to the CPI report on a lag of 12 to 18 months. And that's part of what has been pushing this higher in recent quarters. Now, the other part of what's going on here is the Federal Reserve. And what you'll see here are the Fed tightening cycles. So each of these is starting at whatever the local low was at that point in time, 1988, 99, 04, and where we started in March of 2022. The Fed today is tightening at the fastest pace that we've seen since the beginning of the 1980s. And that's to be expected, right? That data that we were showing on the prior slide with the Consumer Price Index is something that the Federal Reserve is not happy about. And so the path that the Fed is on right now is faster and quicker than we have seen in many decades. We would expect that that's going to continue here until there is any demonstrative evidence that CPI is rolling over and decelerating. And so as we look at that September meeting for the Fed, as we look at those other meetings into the future, it should be expected that the Fed's going to continue along this very aggressive tightening path. So we hope you found this discussion interesting around inflation trends at the moment. And if you have any questions, please reach out to us. Thank you.